Okay, good morning guys. I hope you're all well. Let's get cracking here on the session and just have a little review of yesterday's action. Particularly interesting, a couple of notable events. One in the morning, one in the afternoon. We had some ECB comments early doors.
Group meetings in Riga, which will kick off tomorrow.
Hitting the wires at 8 a.m. with ECB's COER saying that the ECB are looking to front load their QE program for seasonal reasons. It's a little vague at the time. Certainly you got some sharp upside on equities. If you look at my DAX chart here, then yesterday's rally, we'd opened higher than the downward trend line anyway, but then the COER comments just really giving the catalyst for a substantial breakout, and so this is a pretty notable reversal of a month-long downtrend here. If you just zoom in on, let's say, a 1 hour chart, then you can see that the comments came in at 8 a.m. and this boosted the DAX and of course other European markets significantly higher. And from that point on it was a short sharp move and then nothing. We flatlined towards the end of the kind of US session. Things ticked higher. It was balanced, but really the DAX closed not too far off, and in fact pretty close to the top of that initial spike at 8 a.m. yesterday morning. So positive response in the DAX, as indeed other European markets. So what does this mean? I mean, ultimately this is the ECB just being a little bit savvy with their QE program. They've looked at previous years, looked at kind of debt issuance, looked at asset availability during the summer months, and typically the trends are that the asset availability drops as Europe, quite extraordinary situation, they kind of still shut down for the month of August. Europe tends to be closed. I say extraordinary situation. In the modern world, the idea of basically taking a month off just doesn't really cut it anymore from a competitiveness point of view. But still, these guys need a break. So the ECB have recognised that perhaps there aren't going to be enough assets available to purchase through the summer months, enabling them to hit their 60 billion euro a month target on asset purchases. So they've hinted yesterday that they're going to purchase more than 60 billion a month, perhaps in May and perhaps in June. And this will offset what is likely to be their inability to purchase 60 billion euros a month in, let's say, July and particularly August. So they've said, look, on average we want to hit our target of 60 billion a month. In order to do that, we might have to buy a little bit more pre-August and perhaps even a little bit more post-August as well. So this isn't a change to the quantity of quantitative easing, which is expected to remain on average at 60 billion a month. It's just a slight change in the timing of when these purchases come. So whether you want to say yesterday's action off this announcement was overdone, I don't know. I mean, it certainly does give an extra boost short term. It's just then we're going to get a drop off when you hit the summer months, particularly August. So certainly a positive reaction. We had a big move on stocks. The euro, you can see my euro dollar chart here. If I just enlarge that, then a big step lower again. We've had 2 days in a row of substantial downside, both days over 1% losses. Of course, yesterday's move was all about euro weakness in the morning and dollar strength in the afternoon as the US housing data hit the wires, and we'll talk about that in a minute. But just technically, look where the euro dollar's bottomed out so far today. Very important price point here, around 10 or 110.64. This was the end of March high. We had almost a double top here if you look at the start of April high as well. Once this got breached, powerful breakout at the end of April, and then if you look at the 30th of April and if you look at the 5th of May lows, it's around about this same price point, and we're down on it and testing it today. So this is 3 big steps lower here on consecutive sessions, now hitting key medium-term support. So just be aware of this technical level. So stocks sharply higher, the euro sharply lower off this core ECB comment. We had the Bund. Well, we had a mixed session to say the least, but let's zoom in on this, because a powerful push to the upside off Coer's comments, and then it really lost momentum. But it wasn't until the US data came in that then the Bund reversed the whole lot, and in fact the low of the afternoon was right back down on the opening levels of the day. What's happening this morning is we're trying to push back and reclaim those gains that were seen off the Coer comment, so really choppy in here. But now the Bund got dragged lower in the afternoon as a result of the US data, so let's just now switch and talk about that. In terms of the two big moments of yesterday. So the data came at 1:30. It was the housing numbers, housing starts and building permits, both numbers coming in very powerfully. In fact, the housing starts number was over 1.1 million, making it the highest reading for housing starts since November 2007. The building permits number also over 1.1 million. That was the highest reading since June 2008. So powerful numbers. You could say it was just making up for a weak couple of months, February and March, that were weather affected. So, there's arguments to downplay that data in terms of its positive signal towards, let's say, general US economic growth. But still, we got some moves on that. If we just zoom in on the euro dollar, definitely two key moments was the Coer comment downside off euro weakness, and then the second leg lower at 1:30 off dollar strength. Now this morning we've broken and gone again to the downside, and as I showed you on that daily chart, testing that key price point from back at the end of March. So those are the two big events. If we look at the S&P, really interesting to see the fact that we're up on all-time highs, of course, but maybe a potential bearish candle here. But it was interesting to see how the S&P responded to these two events yesterday that I've been talking about. Firstly, the boost higher to, again, new all-time highs off the Coer comment in the morning, but check out what happened off the data. The US data was announced at 1:30 and the S&P tracked lower. And this was where we're getting disruption in how the S&P responds to US data. Yesterday, the data was too good. It was so good that it triggered interest rate hiking fears. You had T-notes reacting strongly, T-notes selling off, dragging that Bund lower as people took this very strong economic data and used it as a reason to perhaps slightly adjust their interest rate hike expectations, bringing them forwards. Whether or not, markets are very sensitive. Whether or not one single bit of housing data is going to shift the Fed's timing on policy is very unlikely. And given the fact that generally we've been having much weaker than expected data, that housing number yesterday certainly bucked the trend. So, you always get short-term reactions to single data points, but don't think for a second that the Fed are going to take note of this housing number and now adjust their timing on rate hikes. That's not the case. We need a substantial improvement across the board with economic data out of the US for the Fed to, let's say, bring their rate hike to September rather than what's expected at the moment, which is December. So, let's not get carried away here, but it was interesting to see that the S&P had a negative response to that very strong US data. Oil had a big session yesterday, so we had dollar strength across the board. It was the second day in a row of the dollar index gaining more than 1%. And check out the oil move yesterday. Big push to the downside. Now this is on a continuation chart. We're now trading the July contract, but I wanted to show you this looking back on how the June contract behaved as it was the front month, and I was talking about a batch of support around 58.30 to 58.60, and we're right in the chop zone of this at the moment. We did break and close below $58 yesterday. That's the lowest close since the 28th of April. Right now we're up and testing this area. If I showed you on a 1 hour chart, I'm actually in a trade at the moment on crude oil. Short just below the pivot level, short, just below the overnight highs. So I might need to just adjust. Well, no, I might move some of these lines. Yeah, but ultimately looking for a short here, having seen this big move yesterday, and looking for this to be technically negative. We had some data overnight, of course, on oil inventories, and we're going to get some the headline Department of Energy numbers at 3:30 today, but what was announced last night certainly helped with this downside, or really confirmed the downside, I should say. So at 9:30 last night, the API delivered their inventory data, and it showed a drawdown on crude inventories of 5.2 million barrels. So this is a big drawdown, the first really big, sizable drawdown from the API, really, of the whole year. We also had drawdowns on Cushing crude, only minor, 217,000. And we had drawdowns on gasoline, 1.2 million. So drawdowns across the board, with the crude number being particularly large. So this tees up the data for this afternoon. So we'll see. We've had a little reversal higher here on oil just over the last hour or so, perhaps hitting some resistance around this point. Okay, I spoke yesterday about an interesting situation in China with the behavior of some of these Chinese stocks. I've got another company to talk about today. This is just a side story looking at how Chinese equities generally have been rampant, and over 100% gain on the Shanghai Composite really since the end of last year. For example, I want to now talk about a company called Hanergy Thin Film, and this has been one for analysts' scrutiny over the last few months. What we've got here is a chart, and actually not over the last 3 months, over the last couple of years, I should say. What this chart is showing here is the percentage change in the share price of this company by splitting every single trading day into 10-minute chunks and taking the average change in the share price each day going back to January 2013. And look what happens. On average, it's the final 10 minutes of the session. If you'd have had a strategy of buying these shares 10 minutes before the close and selling them at the close, if you'd have done that, you'd have made 536% return. If you'd have done that on any other 10-minute period during the session, you'd have made pretty much nothing. A very bizarre pattern of behavior for this share price. Last 10 minutes of the session, bang, big upside, pretty much every day. Very unusual, very suspicious, of course. It's been investigated. Analysts are scratching their heads. Nobody can quite figure out what's driving this. But it has sent this solar panel firm, well, it's actually valued at 40 billion. Well, it's traded off. I'm going to show you the chart from yesterday's price action in a minute. But it traded up to 40 billion valuation, making it 5 times bigger than any other solar firm in China. In fact, making it bigger than all the other solar panel firms in China put together. And it made the owner one of China's richest men on paper. Very, very suspicious. Now, what happened yesterday? Well, they had their AGM, and check out this chart of the share price from yesterday. So I just want to check the share price dropped 47% in one session. 47% downside in one day. This thing's collapsed. Why? Because the chairman didn't show up at the AGM. That's it. They had an AGM and the chairman didn't turn up, and it was no reason was given, and it was a little bit suspicious, and so the share price collapsed 47%. This is the risk of some of these Chinese stocks that have gone through, well, completely unnatural market behavior. This is bubble territory. I mean, this company was trading at 96 times earnings as it topped out, and it's collapsed. So we definitely have bubble territory on Chinese stocks, and these bubbles are liable to burst just on the tiniest of hints of a risk or suspicion, So the chairman failed to turn up at the AGM. He lost half of his wealth. Oops. He owns 75% of this company. That's an expensive dentist appointment. Anyway, just a side story of interest. Let's focus in on data for today. Let me bring up the calendar. And we've had Japanese GDP reported overnight. So this is already in the mix. Japanese shares had a decent response to it. The GDP for quarter one came in better than expected. The Nikkei 225, in fact, made a 15-year high off the back of this. So they came in with data that showed that their economy had grown by 0.6% in the quarter, so making it a 2.4% annualized gain. So 0.6%, that was better than the expected 0.4%. However, I mean, the headlines look positive. When you get into the detail of it, it doesn't look as positive. Most of this growth was thanks to a build-up in inventories in quarter one, and therefore, if you get inventory build-up as the main driver of growth, then it's not sustainable, of course. Once inventories have been rebuilt, that's it. So the catalyst for quarter one growth isn't going to be there in quarter two. This is the point, and so analysts have, whilst the headline's positive, the finer detail underlying that headline point towards perhaps a weak quarter in quarter two. But still, the headline was better than expected. Japanese stocks had a nice return off this. Check out the yen, because this is helping with the Nikkei 225 breaking to 15-year highs. So this is the the dollar versus the yen spot market. If you're charting this on CQG, you'll have it the other way around, the yen versus the dollar. But a very nice breakout we've had yesterday and added to overnight as this market breaks out of this pennant that we've been in for the last few months. And not only did we break the top side of this pennant, which is obviously technically positive, yesterday we also, overnight we also took out the high point from April. So this is yen weakness. This is going to help with the growth story. So that's certainly a catalyst for Japanese shares having a decent run of form over the last few sessions. So data today. First up on the slate, Bank of England minutes. This is at 9:30. This is irrelevant. The reason it's irrelevant is because we had the quarterly inflation report last week where Mark Carney delivered an up-to-date assessment on the situation economically and how the Bank of England reads it, and talking about how they see inflation changing. You'll remember that the Bank of England didn't raise their inflation forecasts despite expectations that they might, and they downgraded their growth forecast. So in the end, this was taken dovishly. And if we look at cable, this is the chart of cable on a daily basis and how we've sold off from the top and a substantial move lower yesterday thanks to inflation data, because inflation data yesterday for April in the UK, the headline inflation hit negative territory, minus 0.1%, a 55-year low. Also core inflation, so stripping out the oil effect and the food effect, in fact, core inflation also dropped below 1%. It dropped to 0.8%. That on its own is the lowest core inflation read since 2001. So inflation factors look negative still, and so you're getting sterling weakness. We had dollar strength yesterday as well, of course, off the housing data, which helped to generate this big move lower, almost 1% down on the session. So we're going to get the minutes from the Bank of England's meeting at 9:30. It's just that this is the minutes from the meeting a couple of weeks ago at the start of the month. So since that meeting, we've had an update from Mark Carney in the quarterly inflation report. So the minutes today aren't going to be relevant. It's going to show 9-0. That is the voting. There's 9 members of the MPC, and these minutes reveal how the voting went, i.e. all of the members, do they want to change rates or not? It's expected to be 9-0. 9 voting for no change, 0 voting for a change. Okay, so this isn't likely going to have any effect unless you get the very unlikely scenario of the voting not being 9-0. Let's say it's 8-1. Let's say there's an outlier, 8-1, and let's say that 1 voted to hike rates, well then sure, that's a surprise, and you'll see sterling appreciating in value. Of course, you could get the opposite, someone voting for a cut. Again, both of these situations very unlikely, but you never know. So if we do get an 8-1 or even a 7-2 vote, then sure, we're going to get big action on sterling, but it's phenomenally unlikely. It's most likely going to be 9-0, in which case you're not going to get a reaction. We've got construction output data from Europe at 10. This isn't a big data release either. And unfortunately, from the US this afternoon, we've got nothing in the first part of the US session in terms of economic data. It will be just that oil inventory data that's going to be released at 3:30. We're expecting a drawdown on crude of 2 million barrels to continue this recent run of drawdowns. So that will be the main focus this afternoon. Tonight, we've got the Fed releasing their minutes from their meeting back at the end of April. So we'll see and maybe cover that in a bit more detail later on. But that's going to be tonight. Other things today: Merkel's talking at 11:15, and that's about it in terms of interesting speakers. I guess. Well, maybe ECB's Visco, but that's going to be at 5:30. Maybe these comments from ECB members now become a little bit more important, given what Coer said yesterday. Are we going to get other ECB members confirming this strategy of front-loading QE ahead of the slow summer months? We'll see. Okay, so that's the line-up in terms of data for the session. So let's get cracking. We've got oil testing the pivot level. We've got stocks having had bullish session yesterday in Europe and just chopping around at the top side of those moves at the moment. You've got the S&P very much more on a sort of negative bias, and what's happened overnight this morning is we've been finding support at the 15th of May high. Okay, and if you look on your daily chart, on the continuation chart, this 15th of May high is fine and important, but it's actually anywhere around just below 2020 is the key support. This is the kind of double top from February and April. Okay. The euro's on the back foot against the dollar, but we've hit that key medium-term support level, which is at 110.64. All right, that's it for now. Bank of England minutes in 30. That's 30 minutes, and we go from there. Enjoy the session. Thanks.